Housing crisis that's ongoing in the UK, unaffordability, potential crash, what's going on? Shall we wait to get in? Why waiting works or it doesn't work? Let's discuss that. If you're waiting for the perfect time to buy a property, you might be waiting forever. The end is always nigh. People are always saying stock market's going to crash, the housing market's going to crash, cryptos are going to crash, and we look around us and see how often does it actually occur. In the short term, yes. But in the long term, no. If you jump in, as I say to many of my clients, just jump in and it'll work. Most do jump in and it does work. So in the long run, you're always better off buying now. It's never the right time or the wrong time. Jump in. So what can we say to back that up? So before we get into specifics, I wanted to revisit our good friend Fred Harrison. Now Fred Harrison, if you may or may not know, was an economist. He may still be, I'm not sure he's still around. But he went back over 200 plus years and analysed housing stats and basically worked out that the average housing cycle lasts 18 months and it has individual distinct stages to that. If you have a memory of at least one complete housing cycle, you may have memory of more than that. I certainly have at least memory of two full ones, 2.5 ones I think really. You think back to the clues of what was going on. What was the activity in the market? You know, how much activity was there? Were people buying or selling? When were most of the people in the general market buying? When were the professionals buying? So look at those different indicators and think to yourself, as a professional investor, when is the right time to buy? And that's what I think JP Morgan said. I'm probably misquoting him. He said, you know, when do you buy in the stock market? He said, I buy when everyone else is selling and I sell when everyone else is buying. So that's what you need to focus on as a professional investor. Look at your own evidence, look at your own research. Don't look at the media. I mean, if you cast your mind back, in 2006, I'll read this out, headline said, you've got a year or two to sell everything. And then another year it was how to get the best 110% mortgages. At every stage, professionals who are watching the signals act very differently to the amateurs who are watching the media. And that's the thing to think about. What are we seeing at the moment? Had a chat with a gentleman in Hong Kong this morning and he was talking about the super high interest rates. Well, high compared to what? You know, compared to tripling, going up huge amounts over the last 3 years? Yes, it has. But you know, I remember the exchange rate mechanism when we fell out of that, and the Grey Prime Minister at the time, he put interest rates up from 10% to 17% in a day. You know, when Margaret Thatcher came to power, she put interest rates up to 15% as soon as she got in. You know, these were crazy times. You know, so what we're looking at today, if you can get a 7% yield and you're paying 4.7, 4.8%, isn't actually that bad. So if you always listen to what the media says, what people down the pub say, what coffee shop people say, then it's always going to be everything's great time to buy. Everything's terrible, don't buy. Those sort of things. And it is completely random because at any one time in any part of the market, there's always good places to buy and there's places you shouldn't be buying. Where you shouldn't be buying at the moment. The return to work business and the end of work from home is meaning a lot of the coastal towns are suffering. A lot of the country locations are suffering, particularly around London and down to the south coast. Whereas if you look around Birmingham, Manchester, buying in the country there was still quite cheap. And so people can afford to still live there and have somewhere in town to work. So it's a different sort of thing. If you focus on the fundamentals and do your research, you're much less likely to panic and sell at the bottom of the market and panic and buy at the top of the market. Okay, prices may fall during a slump, but they will recover. And that's what Fred Harrison and his 18-year cycle is all about. If you look at it, every cycle starts higher than the previous cycle. So what are the current trends in the UK market? It says potentially not by time to buy. UK property prices up by 4.1% year on year to January 2025. Shows pretty good market resilience. And we're saying, again, end is nigh. Average property price is 268,000 quid. That's eye-watering. But a lot of that is skewed by what we've got down in the southeast. You know, regional variations are significant and you can still buy some good stuff. We're doing 1-bed flats at the moment, you know, great community location, slightly outside of Birmingham Centre for £180,000. They're an absolute diamond as an investment. Despite affordability pressures, demand is continuing. We're seeing a lot of people buying every week, every month. Market conditions, interest rates were cut, so they are down a wee bit. And the talk is they'll probably have 2 more cuts during the year because the Bank of England needs to support the economy. You know, they've said that the Labour Party's approach will be successful, but it may take quite a few years to come in. Affordability constraints, mortgage lending is still at 4 to 5 times earnings, which is going to stop people buying for sure. It's normally down at about 3 times. That's very bad. So hopefully we will get some changes from the government to come in and make it more affordable for people. Employment and wages, there's a lot of low unemployment, which is good, and wage growth is pretty strong at the moment, and that's helping sustain the activity. Supply and demand, again, there's still a shortage. I read an article this week about how there's just not enough builders to build the property that the government's trying to do. They haven't got the capacity, and so they won't hit their targets, so we won't find these 4.3 million missing houses that we've got since 1947. What's the outlook for the future? The experts, if there are such a thing out there, expect modest house price growth in the coming years. I think we're talking about the north and the northwest, 26 to 28% over the next 5 years. But again, that's just a projection, and it comes from people like Savills and CBR and Knight Frank who've got money in the game, so they may well be saying that. But I think the point is if you buy and hold, you will get there. Mortgage affordability will probably improve. Borrowing costs are still going to be higher than the pre-2022. So what are the key considerations if you're thinking about buying? Long-term perspective. Always be buying for the long term. I was speaking to, again, a gentleman this morning and his wife, and they were saying they might go back to the UK in 2 years. Perhaps they'll sell the property and buy a home. It's not going to work that way, because your cost of acquisition is really too great. You're paying towards 10% to buy a property. So if you're going to buy it long term. Take out a good deposit so it washes its face, as we say. Key considerations: long-term perspective, micro market variability, look around the country, look at where is going best, buy with your head if you can, not your heart, and do try and negotiate. You can always ask, what can I do? Say no. Should you buy now? It depends on your personal circumstances. It depends on your tolerance for risk. If you are a very risk averse sort of person, you may say, I'll hold on and wait. And I meet many clients who are still holding on and waiting 5 years later. And what's happened over the last 5 years? House prices have gone through the roof. When I first bought in Hackney, I bought for £58,000. I couldn't afford it. It was a terribly stressful time. But now, I think I said to one of my clients this week, at one stage when interest rates were up to 14%, I sent the keys back to the lender, UCB. And they sent them back to me. I said, I can't afford it. And they sent them back saying, we don't want it, because that's the way it was. But you get over these problems. So it all depends on your personal circumstances and your ability to deal with risk. Look at where the best locations are to buy. Be geographically savvy. Think about that. Short-term fluctuations in house prices don't really matter. If you look back over, what happened over the last 25 years, it's still in the longer term gone up. And as long as it is a long-term purchase, but bear in mind your cost of acquisition. If it is 10%, it's got to be a long-term approach. A key to it is time in the market. Don't try and time it. It's all about time in the market. So if you buy and hold, it'll come good. I've just come to the end of a mortgage on a place in Spain, and it's not been a great investment, to be fair. And it's been quite stressful over the years. It's paid itself off. The tenant has paid it off, and I made a bit of cash on it, and I've not really put anything into it apart from the deposit, and that is a success story. So it's time in the market. Get in and keep going. It's so powerful being in the market, buying it, and just staying there. How we cover that at APW is through the Expat Property Playbook, which you see back there. Go onto the link down below. You can download yourself a copy or order a copy, and you'll learn how we do it for our clients. Now, moving on, away from all that boring stuff, I've got some rip-roaring questions from the last few weeks. Marcus H, what impact will this have on rent prices, i.e. interest rate falls? Will cheaper mortgages mean more profit for landlords or lower rents for tenants? Probably more profit for landlords, because they have been squeezed. Will they pass it on to the tenants? I think if it carries on, from my own perspective, the first cut is basically just putting me back into profit, and then what more cuts, I can pass those on to the tenants. And hopefully that's how most landlords will view it. But if you don't agree with me, say so. This is from Pick and Mix 39. You said you have 30 years experience in the industry. Okay, but have you ever seen Bank of England interest rates quadruple in 2 years before? No, but I also haven't seen Bank of England interest rates at 0.15% as they were during COVID. That is historically absolutely crazy. I have seen, as I said earlier on, interest rates go from 10 to 17% in a day, and then be put up to 15% as soon as a new Prime Minister got in. So no, I haven't experienced it quadrupling before, but it has never been that low before. And let's think about it really. 0.15 up to 5%. That's huge amounts of increases, but it's still only 5%. And let's be realistic. If you look for a place, you can get yields on HMOs, on student accommodation, on buy-to-let property easily up towards the 10% mark. And so that is not a real problem. Sorry if you don't like that, pick a mix 39, but that's my view. And then my point of view, 11111. So landlords are going to ignore all the regulations brought in by the last Tory government and buy because they can all of a sudden. I don't think so. No, I think you're right. They won't just forget it all. But I think it goes back to the point we had earlier on. It's a case of people listening to the media and isn't it really bad? Because that's what you see in the media. It's really bad, isn't it? Things are bad. Things are this, things are that. It's not all that bad for being a landlord if you have the get up and go to do it. So I think they will come back into the market. Not straight away, yes, I agree. But over time, it's like anything. With a stock market crash, within 10 years, half the people who experienced that stock market crash have left the industry. So not half, a third have left the industry. A third of new people have come in who haven't experienced it. So that's a third of fresh people. Then you've got those who are there. They're starting to forget about it. And was it really that bad? I don't remember it. Was it so terrible? Like you do, things that happen that bad to you, you tend to smooth over them after time. So no, I don't think I'll jump back in straight away. I think it will come back in though. So there we go. That's it for the week. Thank you very much. Do get the ebook going. And thank you very much for watching. And do take care. All the best. And congratulations to England winning over France last week.